Hey everyone, welcome to, this is week 9 for us, at least at BGW, working remotely. This is week 8 actually of doing twice a week webinars. So thanks so much for Jack Santaniello for joining us, and Adam as well for doing a great job. I don't know if you guys are feeling the way I am, but man, I am so happy when I actually get to see clients and get to see people in person. And I got to do that on Friday. Had my first business socially distanced lunch meeting as per CDC guidelines with the guys at SeedSpark on Friday. And that was I celebrated my birthday, which was awesome. And got to do an offsite with the folks at My Work Choice yesterday, socially distanced planning meeting, which was awesome. So these little things I think that we have to celebrate. But I'm going to go ahead and before we open up the lines, we've got 75 people, or 73 that have just joined already, and you guys are doing that. And before we launch into the questions, which are already starting to tee up, I'm going to go ahead and hand it over to Adam for a little preamble, and then also to Jack. So Adam, go ahead and take it.
Yeah, so I think on this webinar, unfortunately, we're still going to be in speculation mode. So that's not our fault. The promised guidance that we're supposed to receive from the SBA regarding how they'll analyze whether or not you needed the money or what your other sources of liquidity might have been still has not come out, and it's now May 12th. So if anything's going to come out, I guess it's going to be in the next couple of days. So we'll end up scrambling, and hopefully we'll have something for the Thursday webinar. So as I said, today is still going to be more speculation versus anything new really came out.
Jack, I know you wanted to talk a little bit about documentation. You want to dive into that?
Sure. So one of the things we've been talking about specifically last week, towards the end of last week, because of the question as to how do I prove what was on my mind and what led me to believe that there was a necessity. And we've talked about things like, well, I had money in the bank, I maybe had access to a line of credit, and those kind of things. And so I want to reiterate some of that, which is that it's our suggestion that you look at different periods of time, which is you go back to prior to the crisis, you go to the beginning of the crisis, you go to where you are now, and you go to where you think you will be down the road. And that last part of where you think you will be, I think, requires some modeling, some financial, economic modeling with the what ifs, and getting a set of variables, the same set of variables, and running through different scenarios. So for example, you estimate that your revenue has decreased by 70% and will continue to increase or decrease or stay at that level. Or you have your model says, well, it'll get down to 60%, 50%, 40% of a reduction. So model those things out to justify your thought process as to why you thought there was a necessity, and then to kind of match it with what your reality actually is. And so what that also means is the objective nature of your decision, which is gather your documentation, show what you did in prior years, do a comparison to what you did prior to and what you think you're going to do. So all that modeling. One thing that we hadn't talked about, and I'll give one of my partners, law partners, credit, Warren Keene, for mentioning this in passing, is that, you know, for those of us that are living and breathing this, we read articles, we print them out, we highlight them, we save them on our computers. But as business owners, are you guys doing that? And the answer is I hope so, and if not, you should be, because that also goes into that is part of the background psychology and analysis that you're all going through that you may not have documentation for, which is on April 1st, this came out and that influenced my decision. So my supplemental comment to things that we've talked about in the past is you should document what you've been reading, whether you print it out or put it in an electronic file with your financials and everything else. I think that would be a good practice to engage in if you haven't done so already.
Yeah, and I'll piggyback on that again, with an example that I had maybe a day or two ago with, actually it's now happened twice with 2 architecture clients that do public work. So right now, they're similar to a lot of construction related entities. They're running through backlog. So you can't necessarily, they can't in good faith say, hey, I felt the pain as of this minute. But both said that they are starting to hear that delays will be coming and that some projects may stretch into next year because the state and local governments are worried about funding. Like they're starting to see a decline in sales tax revenue that's coming in. The governments don't know whether or not the federal government's going to do any sort of stimulus for them yet because no law's been passed. So they're taking a defensive posture, which is reduction of capital expenditure. So we're going to wrap up what we already had on contract, and then we're going to delay stuff until we have more certainty because we got, people saying, let us go bankrupt. Okay, well, we can't go bankrupt, so we got to make other changes. So to me, an example documentation, of that type of circumstance would be, model out what that looks like and document those conversations that you had in some type of file, just to demonstrate that as I'm requesting forgiveness, I still am uncertain as to what my future holds, even if I was not significantly economically harmed in my 56-day period based on just the facts and circumstances of when I received the loan. I mean, it's almost like, hey, that's punitive for the fact that you were early into the gate in some respects versus late in the gate. I mean, if you could have timed when am I going to get the loan to when do I really, really need it based on what I'm thinking, a lot of people would have waited. But then they made it first come, first serve. So what were you supposed to do?
Yeah, and then there's also a presumption, I think in some cases that we found with some of our clients that said, okay, I have the cash, but my economic analysis is that I'm going to get the money, I'm going to use it for salary and use it within the proper purposes of the PPP or EIDL, knowing that I have that cash reserved for operations after the 8-week period.
Yeah.
Or at least realistically, it'll get replenished because you're using that money to pay your employees currently. Now, part of the analysis is that, did you really need the money because you had the money in the bank, and now you have business owners thinking, well, I thought that was going to get replenished. Now I am in a different economic circumstance. My presumptions of what bucket of money I will have as of August 1st is different now because that my bucket that I've been using to pay my employees contemporaneously during this period of time is not going to get replenished. So that economic modeling, if you had done that previously, is totally changed. And so, it's there's an inherent unfairness in after the fact saying, oh, by the way, we're going to imply some standards on you that weren't part of the consideration when you submitted that application to your bank. So I think there's going to be some corrective action and some further interpretation on that issue, on the forgiveness and the usage of the money as well. But again, as I've said before, that's a Jack theory and not anything grounded in law at this point.
Yeah, and I don't even with that, I just, I know me personally, if somebody tried to tell me that they knew better than me what I thought was going to happen after the fact, then, depending on how much was at stake, I'd throw $100,000 your guys' way to litigate it. So, and I'm just, my own feeling is I think we'd win.
Sure.
And there are people with a lot deeper pockets than us that I think would litigate if it goes the wrong direction.
Sounds like the attorneys might be busy. So if you guys are okay, I'm going to go ahead and spool up some of these questions. We've got 126 people on the line already, and they're still adding to it. So I'll just, as a matter of housekeeping, continue to use the Q&A button for asking questions, and keep the chat for some of your funny quips that we get occasionally. But so the first question is from Dana. We were funded on our loan on April the 30th. We mailed our rent payment, the check, the week before. Can we still include the May rent payment in our allowed expenses, even though it was technically paid before we got the loan?
Yeah, so, I think the interpretation right now is the expense was incurred and paid in the 56-day period. So that, would imply that, oh, well, technically I should, prorate this and then prorate that. But the hard part is, well, how do you then pay it or prove you paid it within a specific period for a specific period? So, what I would do is I would say, all right, I haven't had to fill out a forgiveness calculation yet. Thus, I would put that in if I think about my straight up black and white bucket versus my probably bucket versus my probably technically correct bucket, but don't count on it bucket, I would have put, stuff that I paid that was not during the period, but in the period because I've been delaying it, in my middle bucket of, yeah, I got it. It wasn't technically for the period, but again, the whole point was I'd asked for a rent abatement and my landlord didn't give me one, so they were going to kick me out. So then I paid the rent so they could pay their mortgage. I feel like that middle bucket probably could hunt. I think the other interesting thing, supportive of that, hopefully, if there's anybody on the line from there, the only bank that I've seen so far that's issued any sort of guidance around the forgiveness process so far is Aquesta Bank. And Aquesta, I don't know where they got it from. I didn't call and ask, but they said, our thinking is this is going to be cash basis accounting, which is what I think we've been saying on these webinars, is that, at the end of the day, they're going to look at, show me the bills, show me what you paid. And as long as you didn't do anything crazy or not routine, you probably got a pretty good shot that's going to be allowable for forgiveness.
Yeah, and I would say, just to add on that what you're saying is, without actually saying it, because we don't want to keep saying, is we don't know yet, right? And so we're waiting for interpretation on those things, because yes, if it was an expense that was ordinarily, if it was due, but it was prepaid just because that's a normal payment cycle and it's a timing issue. So I think, generally speaking, the timing issues of receipt of funds and payment of things prior to receipt of those funds, were they used for items that were due during that 56-day period? I think there will be further interpretation of that in the forgiveness calculations. As a side note, I would suggest, as you have, which is, be objective, pull out, tune up your Excel spreadsheet skills in doing formulas and those kind of things to show that you used a formal calculator to do the calculations, and perhaps, as Adam just explained, actually do your buckets in the probably yes, maybe not buckets, and have those calculations ready for your future analysis, because your analysis is inevitably going to change based on the interpretation. You may have gotten it mostly right, maybe you got it all right, but I would say most of us are going to miss the mark because we don't know what the mark is yet.
Yeah, it was interesting. Aquesta referenced the forgiveness form. I don't think the form's been developed yet, but that again makes you think that it's going to be a lot like the form that you filled out for the application.
That would make sense. Next question is from Bob. So his understanding was that they would be able to deduct their expenses as normal, and then when the loan was forgiven, it would not be taxed as income. He said, I guess that could be too good to be true. Can I get PPP expenses forgiven and deduct them from my taxes?
The Treasury issued guidance that said no, but there's bipartisan support to say yes, because that was the original intent.
Yep. All right, good. Yeah, he referenced basically the Treasury Department's emphatic no, but I appreciate you giving that hope that will hopefully materialize into something.
Yeah, I think that while we're on the subject of interpretive guidance, another one that we've gotten quite a bit lately is the employee retention credit, and specifically, if I take PPP funds and they're forgiven, can I take the employee retention credit? And clearly, during the covered period, no, that wouldn't make any sense. That, hey, we gave you money to pay the employees, you paid them, you're not going to get a credit then for paying them, because that's what the forgiven money was for. However, there's the period after, and if you're still in a situation whereby you're still meeting the test of whether or not you qualify for the employee retention credit, down 50% or whatever in gross sales, and you're still paying people, it seems overly punitive to say, hey, even though the credit expires December 31st, 2020, you can't take it in October. We're still keeping people intact while unemployment benefits have expired. So but the Treasury's come out and said, no, that's not allowable either. So, or the IRS has. So I think I'm also optimistic that at some point they'll somebody will say, no, you got the wrong interpretation, because that just doesn't make any sense to me that, PPP was for one period, ERC was for another period. And I recognize I can't double dip, but how is it any different than using EIDL funds post forgiveness period?
Yeah, there are a lot of trade groups, professional groups that are putting pressure on the legislators to make that happen as you said, that it's the way it's supposed to happen, the way it was intended. And so I think there's more to come on that as well.
This is an interesting question from William. We have one client who has been told by their bank that if, for instance, they only spend 74% of their PPP on payroll, then they forfeit 100% of their forgiveness and the entire PPP is converted to the 2-year note. Have you heard of any other banks taking this position?
No.
Have not.
Yeah, that's a new one. And we're on the phone with bankers all day, seems like. This next one's from David. Looking for any updates on forgiveness rules guidance. Not as concerned at Clean Juice about the other issues.
0. All right, David, nothing new.
We've been looking. I was hitting the refresh button up until 10:58 this morning, hoping that something might pop up that we could chat about. So yeah, there's not much out there.
So I guess you're going to have to dial back in on Thursday morning, and we'll see if they have something, because otherwise, I mean, that's.
Yeah. I don't know. For anybody that wasn't on the webinar on Tuesday, to me, the most significant piece of new information that did come out was that in terms of getting back to the proper headcount by June 30th, as long as you submitted a written offer to come back and you had a rejection in writing that they weren't going to take the job, you can include that person in your headcount calculation. So to me, that's the only new piece of information that was good news, but also contradictory to what we've been thinking prior.
This is a great question from Joe. regarding taking the money and decision to keep it or return it, worst case scenario is you have zero forgiveness.
Yeah, so that gets back to how are you going to prove my state of mind when I applied for forgiveness? Or how are you going to prove my state of mind as of May 14th when we don't even have freaking guidance on whether I should keep the money or not on 11:20 Eastern time on May 12th? So yeah, I think that is the likely worst case, is that you get to the end, they issue some punitive guidance, and for what, you just say, oh, well, I'm not going to request forgiveness, or you return the money as of the end of the period.
And I would say there's a little bit of a variable from the perspective that a couple weeks ago that we could probably pretty much say, yeah, that's probably the case. I think that there's one additional component as to whether or not you should have gotten the loan to begin with. So, there's that category of people now that you have to look at, okay, should I have applied for it, and justifying that? Am I qualified? Have I done what I need to do with respect to the money during the time period for forgiveness? And then, am I entitled to keep the money afterwards for money that is not forgiven? So there's various components and analyses that need to be conducted. But I go back to my point as to, demonstrate your world as is objectively and subjectively. What was on your mind at the time, go through your analysis, go through your pro formas. And I think that will go a long way to, even if, and again, Jack theory, that if you miss the mark and it turns out that maybe there was a mistake made in the reality of taking the loan, or even the amount of forgiveness or the head count or anything else, it's my perspective that the IRS, the SBA, Treasury, the U.S. Attorney's Office is going to go after first the people that did it purposefully and maliciously. And I think that their intentions are, or should be, that if it's an innocent mistake in calculations or in thought process or in theorizing or implementing, then I think, and I would hope, that there'd be grace and mercy upon us as business owners, that we did the best that we could under the circumstances in calculating it.
Yeah, and the thing that I would also add to that in terms of likelihood of occurrence. So my oldest son is in AP government, graduating this year, hating every minute of getting out of it because it's so unrelated to his major, but it's given me an opportunity to talk about politics. And, at the end of the day, we have an election coming up in November. Probably the House will remain Democratic. Chance the Senate flips. Who knows on the presidency? My only point in saying that, there's also an element of this that it doesn't freaking matter what the administration says now, because it may not be the same administration. And a new administration can take an entirely different interpretation that probably will not be this if it leans Democratic. So that's why I just feel like, in the window of time where you're going to come knocking on my door, there's also a high likelihood it will not be this administration doing it. Or even if it is this administration, it will appear in a different form because the players may change, or, a law might have changed.
Next question is from Matt. What specific document will I need to prove that people were employed on day 56?
There's no guidance, but our guess is it's going to have to be, either a payroll or, since we had the rejection in writing, probably an acceptance in writing at a minimum.
This is a good one from Joe. How much can certainty and gut worth in justifying why you took the money? Seeing a trend in slow paying customers, hearing news about production slowdowns, industries you have a heavy concentration in, sales deals on track to close stalling, et cetera, and modeling scenarios that potentially impact, is that good enough? Or is the SBA going to require you to show specific decrease in revenue?
You take that one, Jack?
Sure. The level of detail is still, we'll find out, but it goes back to yes to everything. I mean, anything that impacted you, and I hope that what turns out for each of you is that your modeling was more catastrophic than your reality, and that you did better in reality in these next few months than you thought you might. But we don't know. We're not omniscient or omnipotent, so we don't know what's going to happen. We don't have crystal balls. So the best thing that you can do is model and then compare reality, your actual results, on maybe a week by week, month by month basis to show that your reality. And so that's the best that we can tell you at this point, which is just document and compare to actual, and be ready to share your story if you're asked to share your story, essentially.
Yeah, I'll hit, kind of follow up on that point a bit. You know, as you were talking about the catastrophic scenario, I guess document what was going on in the news at the time. You know, to put those two pieces together, okay, what do we have going on? You know, we have, hey, states are reopening. Oh, maybe it's not going to be as bad as we think. And then you can turn on the news a minute later and say, medical experts believe mass resurgence likely. What am I supposed to do with that? It's a piece of information in terms of making a determination that, hey, it could be bad based on what we see today. I mean, nobody could have predicted that we'd be here right now. So given that, when at this moment, okay, states are starting to open up, retail sales are happening, and all the medical experts are saying, and this could turn out really, really bad by doing this. How am I supposed to feel anything other than, oh my God, I hope it goes right, but it might really not. So thank God I have this money.
Yeah, and there's variations of that too, in a sense that, you know, we're uptown Charlotte is 10 miles away or so from South Carolina. I'm actually about a quarter of a mile away, not even that, in South Charlotte. And, you know, the disparity between two business owners, one is on North Carolina, one is on South Carolina, and South Carolina is on a different opening schedule, or even the same business owner that has a unit in North Carolina and a unit in South Carolina, that maybe the South Carolina unit is going to do better simply because they have ramped up operations sooner than a North Carolina. But, you know, if it's one entity, it goes into one pot too. So that's what I'm saying is, you know, again, the level of detail to answer the question is, if you do have multiple units, you need to track it on a unit by unit basis as well, because there's going to be some things that maybe help you and maybe some things that hurt you. And you have to have, yes, the overall economic results, but you should have it on a unit by unit basis if that's possible. And it should be, you know, to be able to output that into a spreadsheet to show the differences in performance.
All right, I love this next question because it's from a lawyer who is glad to see Jack on the screen. And this is from Omar. He said,
Boy.
good to see you. I wish I could see you, Omar, but good to see your name here. Aren't these new rules by the SBA completely circumventing the regulatory process? Couldn't they be challenged in litigation for ambiguity, ex post facto, etc.?
Amen. Go, Jack.
What, Adam, you don't want to take that one? So, yes, the answer is yes. I think there's going to be challenges on the legal front, on the legislative front, but I think there's also going to be challenges on the private front with respect to enforcement of these. And so, as Omar knows, those meet up in a sense that, you know, one of the defenses to supposedly bad behavior in not complying with the regulation is that the regulation is invalid, and therefore I didn't have to follow it. So yes, I think there's going to be constitutional challenges. I think there's going to be to the authority to make certain rules, but I also think there's going to be a bit of deference in a sense that we're all in hyperactive mode, reactive mode, in trying to react and then make course corrections as time goes on, as is evidenced by the fact that we now have at least 45, as of May 6th, frequently asked questions and answers to those, which are essentially interpretations and course corrections to what was previously published. So that's a long-winded answer of saying, yes, I believe there will be challenges both on the legislative side, but also on the implementation side.
Yeah, that's where, so, you know, I'll give an Adam Jackism. That gets back to, when's the timing of this even going to happen? I mean, it's going to be a year or 2 years from now. It's not like, okay, applied for my forgiveness, got the forgiveness, knock, knock, knock. Hey, this is the SBA. Ready for your audit? I mean, I just can't see a scenario where that something like an inspection is imminent. Even in calendar year 2020, I just don't see how they can pull the crap together in that time frame. And then you got the election.
Next question is from Neil. Can we use the funds we receive for auto loans, intercompany loans, like interest on it, employer paid health insurance, etc.?
Employer paid health insurance is in the bucket, clearly so. Auto loan interest and the intercompany interest obligation would be in the far end of the maybe bucket. So again, we don't know. So that's where it goes back to, you know, our suggestion is look at it clean. And if you're not at clean, look at what you'd have to add in with lower degrees of risk to get to a clean number.
Yeah, and there's a difference between the PPP and the EIDL as far as the permitted uses. And if you think about kind of what, at least I believe the fundamental purpose of the PPP loan was or is employee focused. And so it is to provide funds for people to survive, employees to survive to get through this, and provide relief for employers in providing that if they provide it, rather than putting people on unemployment. So, you know, truly a stimulus. And so that, and that's why the PPP, at least at this point, the permitted uses is more limited than the EIDL funds. And, but yeah, we'll put it in the appropriate bucket and let's wait and see if there is further interpretation on that.
Next question is from an anonymous attendee that says, understand we are in speculation mode, but my company is in the situation of not having a clear immediate need for cash, but we will very likely have one in 6 months. We've modeled it out and it looks bad. I know you've covered this scenario in your discussions, but am I right assuming no guidance to the contrary, that we've probably met the good faith requirement in your non-official opinion?
Yeah, I mean, I think so, because in this case, I'm just saying, look, I got hit a little bit later, but had I not had this money, I'd have been hoarding cash right now. How am I going to hoard cash? Let go of the people that I'm currently employing. So.
Yeah, I think it's, again, until we're told what the rules of the game are with respect to forgiveness, it's a lot of speculation, and you just need to do the best that you can do as far as documenting your presumptions and assumptions. And, you know, for example, you had, as an owner, you had money in the bank as of January 1st because you didn't use it. You didn't, as an owner, that's net income. You could have consumed it. You could have gone on a nice trip. You could have, you know, bought something with it, but you didn't. You reinvested it in you, in your company, and should you get penalized for that? And it seems like that, the guidance at its core says maybe yes. And so that's why I think that there's going to be further interpretation as to what term liquidity means in this formula calculation. Access to capital, what does that mean necessarily? We're all making kind of presumptions, but again, have your story as to what it was like, what is actually happening. And that's really the best that you can do at this point until we're told what the rules of interpretation are.
Yeah, I'll give you a real world scenario from a call yesterday. So Brian, if you're listening now, this is what I'm talking about. It's a staffing company that had $1.3 million in the bank and absolutely did not need to have $1.3 million in the bank. So if you roll back to the beginning or the end of the year, they can point to emails from me asking for my advice on what a good working capital number is for them so that they could do a distribution of the excess cash. I gave it to them. They also were in the process of buying a building that they then stalled because of the crisis, but that was going to require $300,000 down payment, but they stopped it. So distribution calculation that would have taken that $1.3 million down to about $600,000. Plus they were going to burn through $300,000 to buy a building. Crisis hits. They never did the distribution because it didn't affect their taxable income. So they just never got around to it. And they delayed the building close, which would have been a use of cash. So they're now in this scenario of modeling out, all right, with PPP funds, here's our best case, here's a median case, here's the worst case. Even in the worst case scenario, that $1.3 million, even with getting made whole with PPP, drops their cash balance to a couple $100,000. So I don't see how anybody could make the case that because I had $1.3 million, I didn't need my loan. Especially on May 14th with no guidance, and even at the forgiveness period, because their projection is their ramp up is going to happen in the late third and fourth quarter, based on the nature of their business.
It's a great example. Next question is from Jennifer. Just want to confirm that we can run our payroll earlier so that the funds clear our bank account within the 8-week period.
We're assuming there's nothing wrong with that. However, I would not change anything today. I'd wait until possibly the last week before your period ends.
Yeah, and I think that staying off the ramp by not proceeding with your normal processes, right? So if you're not trying to pull something into the period that would be otherwise outside the period, that accrued outside the period, and then you get into questions of, well, the work was done, but we're on a week delay of payroll. So those kind of things, again, subject to interpretation. One thing also that I wanted to bring up is, this isn't necessarily related to loan forgiveness and parameters, but more towards the economic realities of your employees is, in putting aside, you asked them to come back, they didn't come back, are they now disqualified from unemployment compensation, is, what do you do in the scenario where the employee has an objective, at least a reasonable concern or objection to coming back to work because they don't feel like the environment is safe enough for them to do so, or they have some other issue, maybe it's a family member that is compromised or something like that. So kind of as a tangent to a point that we've been making many times on these calls is, as far as documentation goes, those kind of things also need to be documented. That what is the scenario within the confines of confidentiality. Obviously, if someone shares with you something personal about medical history or something like that, but I would also suggest that you document those kind of things that filter into the reasons why maybe employees didn't come back to work, or if they were justified. So, I mean, totally tangential, but it was on my mind about documentation.
This next question is from Brent. Good to see your name here, Brent. Another business owner said to me that if 75% is not used for payroll, that none of the 25% will be forgiven either. So if I spend 50% on payroll and 20% on other, rent, utilities, etc., leaving 30% unused, the question in this scenario, would the 70% spent be forgiven?
So that makes zero sense, because all of the guidance has the forgiveness calculation based on an FTE count or a resumption of pay cuts that you made. Therefore, in this case, the only way you're not going to hit the payroll numbers because you didn't hit the head count. So I don't see how. So that just means that it's going to be pro rata, not all or nothing. That's why all these all or nothing things make zero sense logically. Not that this is logical, but it just doesn't make it doesn't make any sense logically, because the only way you'd be in that scenario is, for whatever reason, you were really delayed in opening back up and you couldn't get the head count where it needed to be.
Next
Or
question.
people not coming back.
Go ahead. Say that again, sorry.
Or people said, I'm not coming back.
Next question is from Trey. If my business entity is a partnership and we received PPP for payroll, 100% of that is used for employee wages and documented as such. As a result, the PPP cash allows partnership distributions as well. Any issues there?
There's nothing that says that there isn't. Like, if you applied for a lower number, could you include things that you didn't originally include in it? I think my own personal opinion would be yes. And in your specific case, partnership distributions should have been included in your original application. It's just they came out late on the guidance on that. Therefore, I don't know why they wouldn't be allowed to be paid and possibly included for forgiveness, and at the same time, definitely paid.
So I'm gonna say something that is way out of my corner, and correct me if I'm wrong, please. But I think with respect to, I mean, we're making assumptions, I think, in that question with respect to partnership when they say the word partnership. So they're saying treated as a partnership for tax purposes, as an S corp, et cetera, because I think that there may be, coming down the pike, a difference between the treatment of maybe guaranteed payments to a partner versus net income to a partner in comparison to a W-2 employee of a partnership. And so I throw that out there only to throw that out there without having gone through the analysis or being able to say, okay, yeah, this is how the pathways for each of those things go. But I would be careful about what income or what dollars you're actually talking about in relation to the tax treatment and what is permissible, because I think that the language in the SBA documents is a little nebulous with respect to that, and I think there's going to be interpretation in relation to that as well.
Yeah, what we're following is that it should be something that is subject to self-employment tax at a minimum, whether it was on box one or deducted as a guaranteed payment in prior years. It should have been subjected to self-employment income. If it wasn't, you're not actively involved in that trade or business. Therefore, it should not be. Like, in other words, if you're making distributions to investors who are not active, you definitely cannot include their distributions in your calculation. Yeah, I would not do that.
Next question is from Chip. I'm hearing mixed information on whether or not fleet fuel is forgivable under PPP loan. Can you clarify?
I put that in my brought in the second bucket, bleeding into the third. It's because fuel was part of the sole proprietor guidance that came out after the business guidance came out and talked about what's a true utility. So whether or not auto expenses are going to be allowed for things other than sole proprietors, we don't really know, because right now what people are doing is extrapolating a set of guidance for one targeted group into the whole. So
This is from Jimmy. What if I had 3 full-time and 12 part-time employees before February 15th and now have 9 full-time employees? Will they penalize me for having a fewer head count?
no, because the 12, it depends. If you take the total hours worked by the 12 divided by 160, because it doesn't matter if it's 160 or 120. Well, I guess it would in this specific case. So I divide by 160. So total part-time hours divided by 160 plus the 3 full-time. If that is greater than 9, you got a problem. If it's less than 9, you don't.
All right, great. Jimmy, hope that helps. The next question is, are there clear rules or guidance with what we do after June 30th, 2020? The workers we bring back, especially regarding the workers we bring back. For example, if we do not have the business July 1st, what small business could keep those employees on the payroll? Are you saying that if we furlough or lay off those employees again, that we would not get the forgiveness?
We don't know yet, because the law is silent on what happens after you've applied for and been granted forgiveness. Sorry, it's silent on what happens after the end of your 8-week period, what you do with people. So we don't know yet, because it's silent. So that could mean that you can do anything that you want to. It could also mean that, there's another certificate. I could see him putting another certification process within that 60-day time period when you're getting granted forgiveness. We just don't know.
Yeah, and there's a timing issue too. I mean, we're, middle of May. If somebody gets their funds today, 56 days goes beyond June 30th. So there's, I think, it was unintended. I think there was the thought that people will get money sooner, and therefore June 30th, when they established that, was a safe date. But I think there's also going to be some revisiting of that date with respect to loans that were, that's just 56 days plus goes beyond June 30th.
Next question is, we got 250,000, but we have less FTEs than before. It means that we won't get the full 100%. What happens if the total amount we spent is over the 250,000, but when we multiply by the FTE calculation, we're still under 250,000?
You'd have a reduction on a pro rata basis.
Oh, the forgiveness.
Yeah. Yep.
All right, next question is from an independent contractor. So they're an independent contractor, 1099 for 2 companies. Both asked me to apply for PPP as they cannot pay me for my services for a couple months, nor can they include me on their PPP application. Now I've applied for PPP via my LLC where I'm a sole proprietor. What documentation would I need to provide to the bank to ensure that I receive forgiveness on my PPP loan? I.e., is it enough to show 2020 1099s from these 2 companies at the end of the year, which will be materially less than 2019?
We don't know yet, because you'd be applying for the forgiveness sometime before the end of 2020. So I think that's probably going to fall back more towards the partnership example we had before, because they're both taxed the same way. That it's, what did you pay yourself in that interim time period, and was that something that was always subject to self-employment tax?
This one's from Greg. I want to clarify something with employee headcount. We do have 1 person that did not come back and is elected to stay on unemployment, so I'm guessing we can use him as part of my 630 employee headcount. I have another employee that came back and then today was a no call, no show. So per my policies, he's now terminated. I'm assuming that the terminated employee will not be counted unless I can refill his position by 6:30. Is that correct?
You gonna take that one, Jack?
Sure. I think the safer bet is to replace that body count. So that way there's not a discrepancy. If that body count is not replaceable, then you have an issue as to you did bring them on board. So is that, are you in the same situation as, you know, making the offer and they didn't come back, you know, because they only came back for 24 hours or 48 hours or even a week. So I think, again, and I hate to keep saying this, that we don't know, you know, stay tuned kind of thing. We just don't know what the interpretation is going to be in these kind of one-off situations, in interpretation of whether or not that is sufficient to deem it as an offer and a rejection versus, you know, a termination after the fact.
Yeah, and you probably, if you go back to the person who didn't come back, yeah, at a minimum, you might consider remaking the written offer and having them write their rejection of it, so you at least have that one in your bucket.
Yeah, absolutely. And there is likely an impact on that particular employee that you've offered employment. They, you know, essentially, even though they accepted it, now they rejected it. And does that impact their ability to get the unemployment benefit at that point as well? Not your problem as the employer necessarily, but, you know, are you going to, if you get that notification as to, are they entitled to unemployment benefits? And, you know, you probably going to say no because they quit. So they need to think about that themselves when, and it may be, you know, to your point, Adam, that maybe there's circumstances that they felt like it was all or nothing, and maybe they can come back on a limited schedule as a part-time person if they were a full-time person. So, you know, maybe looking into it is a good idea to see if there's some way you can work it out with them.
Right.
Next question is there any known statute of limitations on the potential audit period for these loans? What are the chances we keep the money, get forgiveness, and then a letter from the SBA comes in 2023 that we're being audited?
You know, all you can fall back on is 3 years for the IRS, 7 years for the IRS if it's fraudulent, and then what's is legal 7 years too, Jack?
Well, I think it depends on the nature of the offense. And so, yes, I mean, obviously the purposeful fraud has a longer lifetime. And so, and again, goes back to what we've been discussing, is that you get that letter and it's, well, maybe you shouldn't have. And that doesn't fix the problem. That they may say, well, give it back. But I don't think they're going to come down, again, Jack theory, that they're going to come down and say, well, several years ago, you screwed this up, give us all our money back now, and here's penalties and interest related to that, unless there's fraudulent intent and actual fraud. So again, speculation, but, you know, putting a practical analysis on the reality of them doing that. But again, I go back to Adam's point as to, you know, what if things change in a few months from now with respect to who's in charge, and is there a tighter look back at those loans and the forgiveness of that? So again, more to come. We'll see what happens, but the best thing that you can do, and I'm sorry to keep saying this, is document your reality and your speculation.
This is from Judy. A real concern of mine at the time of PPP application was whether my employees would agree to continue to work, as they were venting a lot of anxiety and concern about being out and about in the field as land surveyors, even though I had implemented all measures for them to work remotely and/or implement social distancing across the board. We're an essential business, but the initial concern and ongoing concerns have been whether my employees could continue their work on our projects. I think this provides one strong explanation for my belief that I needed the loan. Do you agree? My business would obviously be greatly impacted if my employees chose not to work during this COVID-19 time.
Sounds good.
Yeah, I mean, it's, again, documenting what your reality is. I think I personally went into this with certain assumptions that clients would experience that the older generation, maybe the baby boomers, were the ones that were going to stay home, and the younger kids thought that they were invincible. And in some cases, clients are reporting that that's not the case. It's the baby boomers that are in the office. And I joke around and say, well, maybe because they don't know how to turn on their video screens on their computers. No offense to any baby boomers on the call. But it's, and the younger people, you know, maybe it's because they do feel comfortable working from home and they can get stuff done and they feel more efficient. But I also know that some of them are fearful of getting sick, and it's real to them, regardless of what anybody tells them medical wise or other. And so they're not going to come into the office. Whereas again, I would presume, my thoughts were that it'd be the younger generation that would be in the office more than the older generation. So again, presumption, reality, document.
This is from Chase. Is there any guidance on calculating FTEs where a restaurant who has on average about 28 employees who we consider full-time, they're working more than 30 hours a week? However, the majority of our employees are part-time. If we have to take all part-time hours in the look-back period from February 2019 to June 2019, or January 2020 to February 2020, divide by 30 hours, it adds 35 more to the FTE count. For the forgiveness calculations, do we need to add those 35 in for a total of 63 FTE needed to be rehired by June 30th?
I mean, yeah, because like the way that it reads now, doesn't matter what you put on your initial application. It's the average FTE calculation, and the average FTE calculation is more of a classical definition of an FTE calculation, which is take the part-time people, you know, take the total hours worked in a 30-day period, you know, divide by 130 or 160 or 120 or 160, and there's your FTE count on average for the purposes of comparison. So if you're a restaurant and you can't get that many people there, then, you know, kind of the question is, did you spend all the money or not? Because the forgiveness part would work itself out if you hadn't spent the money, because you didn't spend the money. If you had spent the money, it probably means that you just spent the money for a different purpose than labor, rent, and utilities. So you kind of end up in the same answer, but you know, you should plan on what are the part-time equivalent or full-time equivalent of your part-timers was for the purpose of your average FTE count.
So I just had to give you guys this note from chat from Joe, who is older than a millennial. And he said, hey guys, I just figured out how to turn on my computer screen. Y'all look good.
Thanks, Joe.
All right, this is for Brian. We got the money at the beginning of April and have 3 weeks left in our 8-week window. We've not spent a dime of the loan based on guidance. We're obviously running out of time to spend the money. What's your advice to clients?
You'd have to know about what spending a dime of the money means. I mean, if you haven't had to use it because you otherwise have been living off old receivables or old work, but you still have payroll costs in that time period, you're in the bucket of, you know, I still don't know about the future. I just know that immediately I didn't have a disruption. I think that's probably still okay at this point. Pursuant to what Jack has said about documenting your thought process. If it's I'm totally shut down and I have not spent the money because I have no employees, I mean, you could, I guess you could try to get spent. And if that was a Brian that I thought, you're definitely in the former category. So it's really only, it's really, maybe not. Okay, maybe it's not the Brian that I thought. If you don't have any employees brought back yet, then I think it's just a judgment call on, do I want to pay people to then have to possibly lay them back off at some point in the future? I mean, you technically could hire them all back, pay them all, but then if you don't have any revenue to align with that to help you back with the ramp up, I think it's a judgment call on, are they better off on unemployment and just give the money back, or have it be a debt?
Yeah, so Brian just hit us with a chat and said, hey, I have no employees brought back yet. They're all on unemployment.
Yeah, I was gonna say, if on the unemployment issue, that if they are on unemployment, I mean, you have to make a choice. Either you come back and work, or you are on unemployment, assuming that there's an offer to come back to work. And that if they if you don't have employees, I mean, the money is for a specific purpose, focused on paying employees and easing the burden for employers in doing that. And so if an employer doesn't have that obligation, is not using that money, then yeah, that's you can't reallocate that money. You have to use it for the proper purpose within the parameters and during the time period. So yeah, that's they're getting paid otherwise, and so you can't use that money for its proper purpose, it sounds like.
Okay. Next question is, will everyone who received PPP money have to document their economic need no matter what the amount of the loan was?
I mean, in terms of have to, I think you should plan on having to, whether or not the bank is going to ask for it as part of your forgiveness package. I'd say probably, I feel like that's going to be on the more unlikely than likely side, versus it being something like a questionnaire, like what we're starting to see from the banks. Gary covered it in maybe the last webinar, and I'm starting to see some more too, where the bank just says, hey, we just want to check in with you. Have you had any slowdown in customer payments? Have you, so I feel like it's going to be one of those WebMD, are you experiencing the following symptoms? That is so broad in terms of like, check yes to any of the following. Slow down in AR, check. Worried about demand in the future, check. That's what I would see him putting together based on what we've seen so far.
Yeah, and I'm gonna be a little more emphatic about saying yes, in a sense, as you've said. I mean, it's not terribly difficult. I think the subjective, maybe taking the time to write down what's in your head as to the reasons, okay, but the objective stuff as to numbers, what it was before, what it is now, what it is down the road, what you're, I would imagine that most of you are doing pro formas in budgets in anticipation of what the new reality is for all of you. And so why wouldn't you go ahead and just go through that analysis and have it saved on your computer just in case? So I'm going to say yes, at least the minimal amount of objective data aggregation. And to the extent that you can do some forecasting and alternative forecasting, then I think it is a worthy and fruitful exercise, a CYA type of exercise as well.
So I'm going to do a quick time check, and it is 12:03. We still have about a half a dozen questions. We've had 134 people on this webinar. Here we are 8 weeks into doing these, and the volume is still so high. And I think given all the ambiguity, so we're going to go ahead and keep rocking. If somebody has to drop off, go to BGW CPA YouTube channel later on this afternoon, and this entire webinar will be posted up there like the other ones have been. So the next question is, given the sheer number of loans and the dollars involved, as well as all the uncertainty of what the future holds, past, given the past 8 weeks? Does the SBA even have the bandwidth to scrutinize whether a business was justified in taking the loan in the first place? Will the primary focus be on large loans, or does the authority to forgive rest with the banks?
A lot of questions in there. Authority to forgive rests with the banks, and the SBA has stated they're going to look at every loan over $2 million and spot check stuff below that. Amen to the lack of bandwidth. That's what we've been preaching. What do you think, Jack?
Yeah, the same. I mean, we've talked about this a little bit in prior discussions that what is the reality? I mean, what is the bandwidth? What is the capacity? Are they going to have to hire people to do this? The flip side of that, though, is in this day of electronic commerce and algorithms, is it possible, probable that the SBA might say, all right, we need you, or the banks will say, we need you to answer these 20 questions. And if you answer one or two of them in a certain way, that red flags it and puts you into another bucket. So I think that the reality is, yes, that they are going to have personnel constraints, but I also think that they can potentially automate some of the process to call through all of the applicants and then create another bucket of, let's take a little bit of a closer look at it, depending on the answers to that. Again, speculation, Jack theory on my part, but there's so many things that are automated these days. It seems reasonable that might happen.
Next question is from Arthi. We received our PPP loan amount on 5/9 from Bank of America. We are struggling to see if we need to keep the loan amount or return it. I've got 3-part questions. First one is, what's the worst that can happen if we don't return the money? Second question is there a template that you have for modeling out the data? The third question is, our bank account has both our own cash reserves and loan amounts in there. Will there be any issues in mixing both when it comes to prove that we paid for payroll?
I'll go in reverse order. We think that the forgiveness application process is going to be more documentation and expense reporting. Thus having it in a segmented bank account, we just feel like is a little bit of overkill at this point. The second question was, do we have a template? We don't currently, but we're putting one together. And the first question, I think Jack's really hit on, which is, unless you can say with absolute certainty and are willing to bet your house on it that you're going to have 0 issues, I don't know how you can't certify that the times are uncertain.
Yeah, and a caveat to that is, and I know you just said it, that it may be overkill to put it in a separate account. On at least for my account, there's always there's a button to add on an account, and I don't know if I get somebody's savings account, checking accounts, and that's on the personal side. So you may just, for optics, if it's not too much of a pain, maybe to move it over there just to have it separate. But it's what's on paper and what you can show, essentially, not necessarily the fact that you put it into a separate account. But if it's easily done, then you may consider doing that.
All right, this is from someone that's got an LLC partnership. The partners take distributions and receive a K-1 at the end of the year. It was recommended that the partners get paid on a W-2 for the 8-week period so that the pay is recorded on the 941 for forgiveness. Is that good advice?
No, because that's actually not allowable with the IRS, which is the whole point of why they came out with the secondary guidance saying that partnership income subject to self-employment tax could be included, because that's the equivalent of a W-2 wage.
Yeah, you can't magically become a W-2 employee of a partnership when you K-1s.
Yeah, and we're kind of, if you look at past audits of BGW clients who either became new clients, and this happened in the past, Well, in all cases, we never advised anybody to take a W-2 in a partnership. We just inherited that problem. And, they either didn't stop it or they stopped it. But either way, the period is under audit. It's been 50-50 in terms of the auditor lets that fly and just says, hey, fix it next year versus no, go amend your returns and do it the right way. Point in saying that that's just wrong regardless. And you're taking a risk in doing it.
All right, this is from Twinette. 7 of my 30 employees are part-time. My thought was to put 7 part-time employees on payroll at 30% so they can continue to file for unemployment. Then in 2 weeks, in 2 pay periods, bump their payroll up to 120%. So the average over the 8-week period is 75%. Is that allowed? Or do they need to receive 75% of the paychecks during all 4 pay periods?
That should work.
Yeah, that's pretty creative.
You need to make sure it works mathematically with respect to the fact that they're filing unemployment. I mean, obviously you need to be careful not to double dip into, being compensated. And I'm talking about the proposed 120% bump up. So, check your math.
Not be on unemployment during that period.
Yeah.
Next question, employees that decline employment. Is it our responsibility to inform the state or Fed that these employees were offered employment and refused? In a normal world, these people would stop receiving unemployment payments from the state. Should we be sending in a weekly report to the state or Fed? If so, to who?
Having never logged into the state unemployment system, I believe that you are supposed to do a weekly certification online that they're still eligible. And you would just say that the person's ineligible. What happens after that? Good question, but that's what you would, in addition to, I made the offer to come back in writing and they rejected in writing, that would be the next step in terms of denying, making them ineligible. So then they would appeal it, and Kit comes back to Jack's point about, well, that's great. Guy gave me my job back, but it was, a hazardous environment, so I didn't feel safe. So the only issue with the reliance on, hey, I can have the stick if they'll lose their unemployment with coming back, is that piece of they appeal it. And for whatever reason, their appeal is granted, you probably are still going to win on the FTE count, but it would negate the decertification, the eligibility, I guess.
John asks, if we don't have 100% of our employees coming back because some of them don't want to come back, and if I have the documentation that we called them back and then have the documentation from them that they refuse to come back, will I be forgiven the 100%?
If you spent the money. And otherwise the FTE count was correct.
This is from Brian. Hey guys, any updates or thoughts on whether or not the 8-week period will get extended to 16 weeks or any new guidance on that?
I will speculate, as I have, is that I think there has to be an adjustment, but I don't think it's going to be a global adjustment. I think it's going to be based on receipt of the loan proceeds. And also it may be based upon the actual business of the loan recipient, where you open, where, is there a reason for the delay? The problem with that is that the original intent of having that period of time was to put some objectivity into it and just say, look, this is something that's being provided to you and here are the rules. And so there's no way of telling. It seems like maybe yes, but it creates a logistical challenge, potentially a nightmare in the administration of these loans and the forgiveness portion of it, I think.
So this question we've addressed on a number of webinars, but it's worth asking again. So what are the PPP loan expenses that you can pay with the 25% in addition to rent and utilities? What expenses does utilities cover as well?
So utilities, it's the usual utilities plus telecom. The grayer area is rent on tangible personal property, which would be copiers, stuff like that. And then grayer would be auto expenses.
Next question is, I've been paying my employees, I've got 3 of them, on payroll and have just taken dividends so far in my business. Is it okay that I put myself on payroll this year before I received my PPP instead of dividends?
That's one of those highly likely, and your risk really comes down to, if you've never taken a W-2 and always taken distributions, that's not good. You should have been taking a W-2 at some point. Thus your case is going to be versus, hey, I just do one W-2 at the end of the year and I do distributions throughout the course of the year. You probably got a case either way. It's just the more risky version is if you never took a W-2 ever. And then all of a sudden I started, I would do it, but it'd be a risk.
Okay, another question that has just come in response to unemployment question. Yes, a weekly certification is required by the employee. The employer can deny. DES will send an additional form to ask why the file is being rejected. Documentation must be sent by the employer to appeal unemployment claim regarding reason for separation. For example, the employee might quit, was relocated, terminated with cause, etc. The employer will see the result in the DES portal.
Okay.
Thank you for that, Toinette. Any other questions out there before we wind this thing down? Oh, here we got another one. Neil, we got approved by Cabbage. You're the 3rd one that I've heard that. With not the amount we applied for, and they advised that they cannot resend to the SBA. If we cancel with them, can we go with another lender?
You could. I just think you got the risk of that you're running the risk that it could be 0. So I'd look at why did you not get approved for the full amount? It's highly likely because they only gave you what they thought would be forgivable. So I just, I'd think about that in my thoughts before reapplying with somebody else, because you're running out of a window of funding availability. So you're kind of a bird in the hand versus 2 in the bush type of situation.
Yeah, and I would also say logistically, remember that a lot of this process is automated. So now, do you have the same number, the different numbers in the system? And, these systems, as automated systems, are already overtaxed and being overused than when they were originally intended for. And then some of the ones that have been kind of cobbled together by some of these banks is just, I think you're going to have some challenges logistically in the background if you switch horses at this point.
Yeah, I'd agree with that. Because if you apply with another bank, you've already got an E-Tran number, so somehow that would have to be delivered. So it's a really good point, Jack.
Yeah, and I don't know if you guys have been hearing it, but I have not heard of any banks, even the ones that were taking the last minute, like Hail Marys a week or so ago. I have not heard of anybody that's taking any more new, even though I've heard that there's still close to 100 billion that has not been funded.
Yeah, I think PayPal, places like Cabbage and PayPal are the ones that are doing them right now. So not anybody that we're familiar with locally.
Yeah.
Yeah, and there's something to consider too in the background. And I know the bankers that are on the phone, or anybody who has familiarity with banks and their processes, they have their own risk tolerance and risk parameters. And so, you know, for a lot of them, they're stretching a little bit more than they're used to necessarily, even though they have the funds. So there's also that consideration. Or if you recall, kind of earlier on in the process, even though banks were accepting applications, they weren't processing them because they didn't want to apply or put them through the SBA program without knowing what risks they were taking or what liabilities they were taking on. And then, if you recall, the government came out and said, well, you know, these are the things and the only things that you need to do as a certifying bank, and you rely upon the borrower's certification directly, and you know, you will not be held liable or responsible if you do these certain things, which were kind of minimalistic. I mean, they cut out, if you compare the process for these loans to a normal SBA 7A process or similar processes, then you see that there were, I don't want to call them shortcuts. I think that there was some efficiencies built in to make things theoretically happen faster, but the reality was it didn't necessarily happen that way.
All right, these are a couple follow-ons from Neil. We have 2 W-3 since we have a monthly and weekly payroll, and I submitted both, but they only took one. B of A got rejected because we got approved by Cabbage, but if we cancel with Cabbage and go with B of A, do you think they will go through since they got rejected earlier?
You still got the same number problem.
Yep. And logistics problem of electronic systems talking to each other and everything else.
All right, any other questions out there? It looks like we have successfully answered all of those questions. Thanks to the 134 people who were on this webinar today. Hopefully we will have some additional guidance before the line of demarcation on May the 14th. Any parting thoughts from either of you guys?
I'll just say, you know, we continue to monitor. You're 48 hours away or so from the day of the overtime of the day of reckoning. And, you know, the fact that we haven't heard anything, again, Jack theory, I think it had, you know, to give somebody a set of rules and say, apply these rules to make sure that you're in compliance, or else it seems inequitable to do that to business owners with a little bit of time, with giving them only a little bit of time to do the reconciliation and apply those rules. So I expect that there will be, because we haven't received that guidance as promised, and we're 5 days into the 7 days of extension, I think there logically would be another extension once those rules are given to us, or maybe even they acknowledge the fact that they just haven't been able to get it together. And there would be good reason for that. Like I said before, there's a lot of interested parties, whether they're industry groups or professional groups, that are voicing their opinions as to how things should go. So there's a lot of commentary that the regulators have to go through in order to try to get it right, so that they don't have a revolt like they've had on the various other things that they've put out there and had to correct through these 45 FAQs so far.
So I'm not a big conspiracy theorist, but do you think it could be that the federal government is delaying this just to keep us on the air longer?
Gives us something to do and kind of break up the day, I guess. Sure.
Oh my goodness. Yeah, like we had nothing.
Beats doing tax returns. and turning docs.
I thought you were going to say something like Zoom is part of the conspiracy, like we keep using their platforms and GoToMeeting and GoToWebinar and all those other things. So who knows?
Yeah. All right, gentlemen, you did a great job again, as usual. Thank you, everybody, for taking time out of your day, and hopefully this was helpful. Hopefully we'll see you on the same bat channel on Thursday. Take care.
All right. Thanks a lot, Gary. Thanks, Jack.
Thank you.